Hi guys, John here, Mr. Forex Fire, and in this video it's just going to be a quick little concept on how we use an area called supply, which is obviously from the top end, and again demand, which is on the bottom end. So it's a distribution and accumulation, okay, and how we can focus our attention within either or of those areas and how we will determine to get in on a trade, and not only get in on a trade, but look at getting in on a trade on a more defined entry. And you just have to excuse what's going on in the background. It's just the Xbox, the Burns Xbox coming on at the moment. So what we're going to do, I'm just going to share my screen, and I'm just going to talk you through a few things. Okay, so let's just take a look, make sure we are recording. Yes, we are. Fantastic. Let's make this bigger. Now, I've done a video in my Discord channel, the Forex Fight Discord channel, a while ago on how you can determine, okay, how you can determine, and you might want to take notes on this, how you can determine entries or determine a higher time frame with a lower time frame entry. And you don't need to really switch between your time frames, okay? And again, this will all make sense within a minute or two, and I'm just going to draw out some stuff. We're going to have a bit of fun. Again, these videos are all done on the fly, even though they are recorded, okay? I don't edit anything from this. If I slip up with my word and anything, you're just going to hear it basically on the fly, okay? Now, this is on the 1 hour. It's the Euro USD, okay? And as you can see, we've come on a downtrend. And as we've came on the downtrend, what's happened is we've come back up and we've broken structure from these lower highs, okay? So as we've come down, we've got lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, until we've treble bottomed out. And then we've come up, creating a higher low and then a new higher high, okay? And then we've tanked on the bottom here, coming back to test where this treble or quadruple bottom is. Now, I'm going to draw a few things on this chart as it is. Again, looking at this chart at the moment, it is a candle chart, okay? As you can see, as we scroll in, you'll see the candles there, okay? But again, we are scrolling out, and there's a reason why I'm scrolling out on this, is because I'm going to show you how you can use these sort of higher time frames to then get in on the lower time frame entry, if that makes sense. But what we're going to do, we're just going to head over to the left hand side for now. Going to click on the eclipse, and then we're going to click on this pencil with a lock. This just lets you indefinitely draw the eclipse on your chart, okay? So that's a tip for there. And what we're going to do, we're just going to highlight the path on the way down on the downtrend, okay? So this is a high. We've come down. We've got what we call a lower low, okay? And then we've come back up. Because we haven't broke structure of this, we've got a lower high. We've come down. We've got a lower low. Got a lower high. Okay, let's just get this out. We've come down, broke the structure. So we've got the lower low. We've come up, lower high, and just follow along with us, guys. We've come down, broke the structure, lower low. We've come up. And again, we broke it a bit there, but it was not a proper break of structure, because as we've come back down, we've got a lower low, okay? So we've continued. So this could be classed as a fake out, okay? We've come up, lower high, okay? Down to here, and as we're starting to peter out, you've got a lower low. As this channel is coming down, lower high, lower low, lower high. Okay, we'll go down this one, lower low, lower high. Started to go on not so much a lower low. This is where we bottomed out. This is where the reversal came. We've got the breaker structure of these two significant points. So this is a breaker structure here. So this is a higher high. This has come down to do a retest, hasn't broke this structure. So this is a higher low. We've come up and rocketed past this. Okay, so we've got a higher high, come down, higher low. And then again, we're starting to peter out again. We're not breaking the structure. So this is now going to be a lower high. Again, we bottomed out here on a double tap out. So this is liquidity here. Again, we haven't broke the structure on here. So this is a continuation of the down on this particular maneuver. Okay, on a bearish move back down, because we're not breaking structure of the previous high points. Again, we broke this here. This is the continuation down, and then this is just confirming we are now in a downward channel, and then we've tangled out. Okay, now just get rid of the tick, get this along here, get rid of that last one, and I just want you guys to look at this sort of stuff. Okay, now I'm going to draw something on here which is called a path. Now the path is a tool that is inside of where the eclipse was. This would normally be on brush, the eclipse, drawing the path, and we're just going to structure the maneuver down from the downtrend up until the reversal of the trend reversal. Okay, again, structure wise, we still have not got a massive uptrend on here because it just came to test certain levels, but I'm just going to show you something. So we're just joining the dots as so. Lower highs, lower lows, lower highs, lower lows. More or less a double top. It did break structure. It was a fake out, come back down to continue on the downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, although we did get a spike out with the wick. We've got a liquidity forming here, okay, which is significant. As you can see on here, it's a significant area. This may come back to retest this area, but we'll talk about that more in a moment. We then started getting the reversal as we created a higher high from this point. So just join the dots, higher low, okay, higher high, higher low. Not so much a higher high, so this is a lower high because it hasn't broke that structure. We've come down to test this here, liquidity again. Lower high, and then we broke structure, so this is a lower low, lower high, and then we got a lower low. Okay, so this is a structure what we're looking at the moment. Now, what I'm looking at the moment is this sort of area here. As we broke out of this downtrend, okay, as we broke out of this downtrend here, okay, you've got these low lows, lower highs, low lows, lower highs, low highs, low lows, and then we've come out, we've come back down, then we did a spike up and we broke out of the downtrend. Okay, so what sort of area I'd be looking at, in all honesty, is where we've got this push here. We've got this big push coming down. Okay, so this, if we just make this a little bit bigger, and I'll explain in a moment, this initial downtrend, okay, this is a maneuver in itself on a higher time frame. It is an impulse maneuver. Time is fractal. Within within these higher highs, higher lows, or the lower lows and the lower highs, what you've got is between here, you can see fractally time in the candles on a lower time frame will move between these areas, and you will get peaks and troughs within these areas here. Okay, so what I'm aiming at and what I'm getting at is basically from the high to the low is where you would normally do let's say a fib retracement, where you go from a swing high point to a swing low. Okay, let's just have a look at this and I'll explain again. So as you do this, template, bankers, what you've got on there is Fibonacci levels. These levels are very important. Okay, so this would be an impulse move coming down. So you would measure from a swing high to a swing low. However, as you come down fractal wise, you've got these areas of what we call supply, and we've got areas of what we call demand. Okay, so on the top is supply, on the bottom is demand, and these are always heavily sort of concentrated zones of importance on where things and institutional wise could be testing and retesting and give us a push to a further upside or a downside. Okay, so with that in mind, which ones are the most important areas within these impulse moves? You normally find from a high point, it's normally the first or the second area of on this occasion, it will be the high or the lower high point, the first or the second, because this is where the mitigation area would be, okay, on the return. And then on the bottom, you would more so get some on the bottom side, like in the liquidity area, okay? So what we're going to be looking at is this here. I'm just going to show you on here because this is touching the third point, okay, the third trough down. I know I said the first two, however, you can see where we've had the push down, okay? What we're going to mark off here is on the horizontal area, we're going to mark that third area, okay? So as you can see, we've pushed along from the third peak all the way along, and you see we've tested here. Now, if we go deeper into this third area, okay, let's take a look deeper into this third area. Now, we've got things which you can call order blocks within the supply and demand area. So this is basically the last up before the down, or you've got things which is a good friend of mine, which is Anton. He teaches on MendFX. He teaches things called the Mend blocks, but for the guys that follow me, I call this a firebox, okay? Just so it distinguishes it well from the concept and the stuff that I teach, okay? So it's a shout out to Anton on this. What you've got here between this fractally is the down before the up. So what you are looking for is the square, okay? You've got the last up before the down, okay? So what you've got is this maneuver here, okay? And as we scroll out, we are going to do, that was the last, and I'll just scroll there back in. If we go back, okay, you'll see here the up before the down, wick to wick, okay? Scroll back out, go back, go forward. So the last down before the up, and if you look on here, we are heavily looking at a 50% area, okay? So again, if we go back into here, so within this impulse here, we are looking for the last up before the down, and you can see we've got a roundabout here to the wick, which is here to here, okay? Scroll back out, come along. Then what I would generally do on the concept of this, I would sort of have my fibs, have it marked out. I would generally set it as a concept, we call it an IP here. I would have a 50%, okay? The 50% I would mark off there, okay? I would generally, because this is the order block or the MendFX, or it is the firebox, as such as I call it. This is where contracts reside, okay? So I would mark 50%. I would then drag this further in and then mark 50% of that, okay? From there, that would be an entry sort of level on a short. The stop loss will be just above where, obviously, this area is from this peak, okay? Let's just take a look. From this peak, you can see we are just above let's have a look at this. We are just above where the high is, okay? Let's just mark that out. Okay, we've got about 7 pips. You can see it's just above this area. From there, where you are marking, okay, where you are marking to go for a target area, you are basically looking towards where this initial drive, this initial channel, this initial push down, which is, again, very important right here on this area here. We would sort of look into this. Okay, from there, I'll just get rid of that. You can see we've got the double bottom. Just get rid of that. You are then looking for the last sort of push down, which is on this leg here, as we've marked out. You've got from there down to here. Okay, push this out. Let's have a look. We're just pushing this out. And then again, you can refine it even more to around about this area here. Okay. And then again, you're looking for the 50%. And it's come deeper than that, to be fair. You look for the 50%. Again, mark your 50% down. Bring your line down to that 50%, and then bring your line down again. Okay. This is your area here of your target. And if you drag this out and mark this down, you can see there we've come down to targets where the channel came to. This would give it a fantastic risk to reward of 19 to 1 or 1 to 20. So every 1% you risk, you're going to get 20% back. Now, this is just a little example of some of the stuff that I teach, some of the stuff that I've been learning, the progress that I've been going through with regards to smart money. Again, we look for these channels with regards to a downtrend. We wait for the break of structure on the way back up. We look for the highest point of that possible channel. Okay. We have this marked out, as I say, with regards to impulse moves with the ABCs on the way down, the higher highs, the high lows, the higher highs, high lows, low lows, lower highs. And then from there, I normally look at the first or the second sort of peak point to look for an entry area within a zonal area called a fire block or mint block. And then we take the 50% of that particular move. So what I'm getting at is when you look at these, okay, each one of these on a pullback, that is, each one of these on a pullback has a significance, okay? So you could see that there has a significance, okay? So as we've come out, okay, as we've come into the pullback, you've got the down before the up, okay, or the up before the down. This is a significant area. What's happened here? You've had the push out. You've had the pull back in to this area here. Again, we speak about 50%. Go up into here. You can see here, it's come up and it's retested 50% spot on, okay? Again, what we've got as we come down, you've got, again, let's just take a look. We'll have a look at this one. You've got an area here. Just as an example, you've got this trough or peak here, I should say. You've got that there as an area of supply, okay? Push this along. Let's see where the 50% resides. Go from here to here. Again, we've come out, okay, of the block, out of the fire block, the mint block, the order block. It's an extended order block, to be fair. We've come back in to mitigate certain contracts on this, but we've come down. Again, we've come up, we've bang on hit the 50%, and then we've come back down to retest an earlier area. Again, the push down. This is the demand area, the push down before the up. What is this going to give us? 50% of that. Okay. As you've tested here, you've come down and more or less to the wick, got a TP there. Okay, so let's just maximize that. I hope that shows a little bit of stuff that I've been doing, stuff I've been learning, a procedure I've been going through with regards to not going totally in depth with the fibs, not going totally in depth with the zonal areas for the fib levels. You can quite easily use a downtrend or an uptrend, wait for a break of structure. Okay, on that break of structure, we wait for it to return back towards an area of importance. On this occasion, we had the down channel. So as we broke structure coming down, we are looking for re-mitigation of the area to the top side. Okay, you look for the first couple that are on there. You draw on the higher time frame where you've got the path. Okay, you look within the impulse or within the pullback move, I should say. So as you've come down, you've got the A, B, C. Between the B, the A and the B, you will have the pullback. Okay, within that pullback, fractally, you're going to have candles moving up and down. Within the fractal nature of that pullback, you will have the last down before the up. You are drawn out your contract area. Okay, now I hope you follow along, take notes of this and watch it back. It will come clear once you practice this. As you've got that order area or contract area zone of supply, which is on the upside, come out, and then as it goes back into retest further down the line, once you break structure down here, okay, it's going to come back and it's going to retest that higher area, simply because it's got a more high probability of retest that area as opposed to the other bits on the way up. Yes, you're going to get some testing, some on the way up, but on the higher side of the price, as you have started that structure of the downtrend, it's going to test those higher ones with more high probability. And again, going back on that pullback maneuver, you're just stretching out from the pullback a section of that candled area with the down before the up, pulling that across, waiting for that to eventually come back to retest that higher price side. And then what you are going to target is you're going to target the lower part of that channel on that downtrend, because it will come back to respect that. And on that, again, just share the screen one more time, because I don't make this stuff up. It happens time and time again. You will get the nature of the downtrend come back up to bang and slap it straight in the face of the higher side, to then come back down to retest or go towards structure points of things like this sort of stuff here. You've got a structure point here, you've got a structure point here. Anywhere where there's a pullback, you have a structure point. Okay, structure point here, you can see where it's tested. Again, structure point here, you can see here, look, just on here, again, don't make this up, you can see on here, it's come back, broke it, retested, and it's structurally tested that area. We'll go back, and then eventually it's come down to hit the 50% and more. Okay, so that there is a risk to reward of 1 to 20. A fantastic result on that. Okay, guys. So again, I hope you're finding these videos that I do informational, educational. I do urge everybody to go back and watch what I do on these videos and take notes. Okay, if you need any further help or assistance, scroll down on the description that I've got, click on the Facebook page, send me a message, get to know more about me, and then from there I've also got a link to join us on the EasyFX, and then you'll get more even out of that Discord channel as well. Okay, guys, so I'll see you all later.